Thank you so much for joining us, finalists. We're so excited to kick off the third day of the boot camp for the 2021 XTC competition. It's my pleasure to introduce Rashmi Gopinath. She's the general partner at B Capital Group, leading growth stage investments. She's one of the most prolific enterprise SaaS and infrastructure VCs, and she's led investments in Innovator, Yalo, Phenom People, Armory, Clary, and many other hyper growth startups. Previously, she was a managing director at M12, Microsoft's venture fund, and led investments for the fund globally in cloud infrastructure, cybersecurity, DevOps, AI, and enterprise SaaS. She brings a combination not just of venture capital experience, but also startup operating experience. Previously, she was the global director of business development at Couchbase, one of the fastest growing database startups, as well as Blue Data. And before that, she was an investment director at Intel Capital, focusing on cloud infrastructure and big data companies. Rashmi has an MBA from the J.L. Kellogg Graduate School of Business at Northwestern University and a Bachelor of Engineering from the University of Mumbai in India. And with that, I'll pass it over to Rashmi to discuss really how to set yourself up for success as a growth stage startup.
Thanks for that very kind intro, Ash, and Victoria, thanks for the opportunity. It's great to be speaking with a great set of founders and entrepreneurs on a topic that's pretty close to my heart in terms of how do we help companies scale and grow into those massive growth scales that we want them to get to. I have a short presentation that I'm going to walk through. We can keep this interactive, so please do ask questions as we go along. I'll try to get to most of them. All right, so the first couple of slides are just a quick overview on who B Capital is and what we do. So like Ash mentioned, we're a multi-stage venture fund. We have an early stage fund. It's managed by a different team that primarily leads and invests in seed and Series A stage investments. I'm part of the growth team, and so my focus is primarily on Series B all the way up until pre-IPO rounds. We're a global fund with presence in multiple regions across the US, as well as in Asia, between Singapore, Vietnam, Indonesia, India, and China. We have a strategic partnership with the Boston Consulting Group that are minority LP in our fund, and we work with them quite closely to extend the reach for our portfolio companies through their network in 50 plus countries. We have a fully fledged, built out platform team on the fund itself that can help our portfolio companies with recruiting, fundraising, CXO introductions. And so the goal for us is really to be the most value-added growth fund capital that founders can bring to their cap table. Moving on to the next slide, this talks a little bit about what I mentioned before. In terms of the sector focus, we mainly focus on enterprise software. Within enterprise, we look at multiple verticals and horizontal sectors. On the horizontal side, where I spend most of my time in, we look at investments across cloud, cyber, DevOps, AI, and SaaS. And then we also have focus across fintech, healthcare, retail, industrials, logistics, very broad B2B focus. In general, our check sizes on the growth stage ranges typically between 15 to 20 on the smaller side to 80 to 100 on the larger side. We look to lead or co-lead rounds. We have roughly about 70, 75 companies in our portfolio currently. So moving on to the topic of the day is how do you transition from that early stage of your startup into the growth stage? And this gives you more of the inside baseball into what do investors typically look for companies that are demonstrating strong growth and we believe are ready for infusion of growth capital to help them through those exponential growth stages. So if you think about the typical startup growth stages, you have the early stage, which is the seed Series A stage, which is more of building out the vision and proving out the product market fit. This is where you typically build your MVP product, you get your initial customer wins, and you're starting to build out your product and engineering teams. You may or may not have a sales or a go-to-market team just yet, maybe just one person, or it primarily is founder-led sales at that point in time. And then as you start getting into the early growth stages, which is the B through D stages, this is where you're starting to prove out your growth hypothesis. You're starting to start demonstrating your operational metrics and business metrics, with which eventually, as you're getting close to that D and E stages, show that path to profitability. So the focus on these stages is mainly around hitting those growth milestones, building your internal systems, and we'll talk a lot about this because it's one of the most critical pieces. Is how do you measure and track progress within the company, and how do you determine what levers you need to push to drive additional growth or to pull back to ensure that the growth comes at the scale of efficiency that you want at that stage. This is where you're also building out the rest of the management team. You're identifying what your operational goals are going to be, and you start thinking of expansion strategies, which could either be partnering with other large incumbents. You're thinking about international growth. You start thinking about M&As. You think about which additional new product lines would you launch to start to drive some of those growth metrics. And then as you get into the late growth stage, which is primarily closer to that pre-IPO horizon, this is where you're really optimizing for profitability. You start thinking about governance and IPO readiness. You're upgrading your board. So we won't go into that stage as much. I mean, our key focus in today's session is mainly going to be on that B through D stages. So in terms of how to prepare for growth, I mean, there's really 5 key pillars that you want to think through. One is identifying your growth milestones. So this is where you're going to define what are those North Star objectives, what are those company-wide OKRs that you want to define that help orient decision making. And it's important to identify this upfront because you want your entire team to kind of marching towards that same drumbeat, that same goal that you've set for the company. Because at this stage is when you're starting to grow the team. You're going to grow from 10 to 50 people to 100 people. Your teams start to get more distributed. And so you need to define what your org-wide and company-wide goals and objectives are so that everybody is kind of aligning to that same milestone. What we have commonly seen at this stages is when you start having distributed teams and multiple priorities, the focus can start to get more diluted, which can lead to companies being unable to hit their growth targets. And this is where burn rises a lot faster than where the top level growth is getting to. The second, which is equally important, like I mentioned earlier, is around building those metrics and sensors and measurements in place across the full business that helps you continuously measure what's going on within the organization. And this also helps set a pretty strong foundational block so that you can set the right level of transparency and communication with your investors and with the employees. Team upgrade is an important aspect in this growth stage because this is where you're starting to build out your sales and go-to-market teams. Very common founders are going to realize that the team that has helped them grow from 0 to 10 needs an upgrade as you're thinking about growing from 10 to 50 or 10 to 100. And so this is where you will bring in subject matter experts and people with that right industry and functional expertise to help accelerate the growth curve for the company. Operational efficiency goes hand in hand with measurement and tracking how the company is doing. So this is where it creates a closed feedback loop where your metrics that you're gathering is going to feed into what needs to change from a workflow perspective, from an org design and an org structure perspective, and how do you really drive sustainable growth. It's quite obvious at this stage you are going to see a higher burn rate. But as long as like there is a clear eye towards how does that lead to eventual profitability, that's what we want companies to start thinking about. And then the last point is on expansion strategy. So this is, like I mentioned, is where you think about what are going to be your key priority markets that you would want to get to in the next few quarters, in the next few years, and how do you build those capabilities within your organization, either through tuck-in acquisitions to partnering with the right strategic partners that you can bring on board. When do you start to go international? How do you figure out the ROI and the justifications on this is the right time for us to consider expanding in new markets? So going through a few of those high-level pillars that we had talked about, the first one is around building a high-performing growth team. So again, some of the best practices here is you want to hire experienced people on the product and the go-to-market side that have gone through a prior growth experience. This needs to be balanced with the internal promotion paths and career development paths that you also want to set for the high performers on your team. So where you wouldn't hire external folks for every single leadership position in the company, you want to maintain a good balance between providing growth opportunities for people that are showing the potential to grow into those roles, as well as bringing in some of that seasoned experience that people from the outside can bring into the company. You want to instill that metrics-driven, data-oriented culture, which is going to be imperative for growth down the line. And this is why those metrics and operational efficiency becomes really important to kind of build those foundational blocks in those early growth stages. As a founder and as a CEO, you want to emphasize on communication and collaboration. And this message needs to be said from the top down. You want to build a culture where people believe in the collective win and people believe in working well together. And so setting up what those cultural values are going to be for you as a company, for you as an organization, is something that you want to think about in those early growth stages. And this is where we typically recommend companies to bring in a people leader into the company. It doesn't have to be a chief people officer, but at least somebody at that director or a VP level that can help set some of those cultural values in place for the company. And then the last thing is you really want to set an example for the rest of the organization. And so your message on growth, your message on building that right culture for the company is what you need to demonstrate, and you need to set an example for the rest of the company. So it's something that we see companies that have gone through a high growth. Founders spend time to think about how do we build a cohesive culture and a cohesive opportunity for the rest of the company to work together well in those next 5 to 7 years. Digging a bit deeper into the operational efficiency side. So again, this is again from the investor mindset, but also what we've seen companies primarily focus on is you need to set what are those operational metrics that are relevant to your business. And again, the few metrics that I've highlighted on this slide, it's meant to be directional. Some may or may not apply to your company, but in general, like there's, I would say, 5 key things that you need to keep track of. One is around your sales and marketing function. The second on your customer success function. The third is on your operational expenses. So think of your costs. The fourth one is around your product metrics. And the last is overall business and finance metrics. And so on the sales and marketing side, some of the things that, again, you're probably already familiar with, but the more common ones that we typically look for are top line growth, looking at your net retention numbers, looking at the churn numbers, looking at what the LTV to CAC ratios look like, which primarily tell us like how much does it cost for you to drive additional revenue growth for the company. So for every new dollar that comes into the company, how much are you spending in those customer acquisition costs? On the customer success side, some of the key things that we look for are around CSAT and NPS scores, expansion percentages. So how does your CS team drive renewals, expansions, upsells within the customer base? And also from a support perspective, what is your customers' end experience in getting their issues resolved, getting support for the tickets that they're raising? So that's something that is helpful to track. On the operational expenses and the cost side, so this is where you have your cost of goods sold. So think about what does it cost from a cloud hosting standpoint. Are there technical efficiencies that you can drive into the company? What do your gross margins look like from a product standpoint? What does your feature adoption look like? How much time are customers spending in your applications? What do your daily active users, your monthly active users percentages look like, and how does that continue to increase over time? And general business and finance metrics is around your profit margins, your gross margins, your AR aging, like are you collecting cash in a pretty efficient way? Do you have revenue concentration? So again, like I said, these are meant to be directional, but as you start to get into the growth stages, these are going to be extremely important and what growth investors typically look for in companies. The expansion strategies, again, I'll run through these pretty quickly. It's primarily around how do you drive inorganic growth for the company? And that can come through business developments or partnerships that you drive with system integrators, channel partners, cloud vendors. You're thinking about roll-up acquisitions. You're thinking about growth outside your product core. And so what are some of the adjacent spaces where you can introduce new product lines? You think of freemium versions. You're thinking about how do you sell tangential products or build tangential products to what your core is, and figure out how do you drive each one of those product lines into a $50 million or $100 million product line. And then geographic expansion is how do you enter new markets? Things to keep in mind as you're doing that is understanding what is the market size within that country, what could be some potential implications of taxes or trade treaties, data security, which is incredibly important in Europe as an example. So you want to keep your opportunity costs in mind as you're thinking about these international expansions. Some of the common growth traps which we've seen companies run into, again, these are not a comprehensive list, but the more common ones that we see. One is around just not having the right members on your team. And so wrong hires, as you're growing extremely fast, we've seen companies that are looking to add 100, 200 people in a given year. You want to make sure that your hiring standards are consistently high. You don't want to hold on to misfits for too long. It can really drive down your company culture and your company productivity. Ignoring data insights. So again, keep a close eye into the metrics and what are the numbers telling you. You don't want to be in a situation where your burn is unsustainable and you're running out of cash and you don't have the growth metrics to go raise that next round of funding or to help the company get to an exit. Failing to build a strong brand, important again at the growth stage, because this is where you want to be in those Gartner Magic Quadrants. You want to be viewed as an industry and a category leader. So focus on marketing and brand building towards that. Missing market shifts and competitive dynamics as you're running 500 miles an hour. You don't want to lose track of, is the market shifting beneath you? Are things just moving to a different direction? And if yes, how do you change course so that you continue to stay relevant to the market? One example there is on the Hadoop space, where Spark came in as one as an early incumbent, but then quickly overtook Hadoop adoption, which kind of left companies like Cloudera and Hortonworks, which were growing quite fast, but unable to compete with the likes of Databricks and Confluent and other players in this space. And lack of focus and discipline. This is where you as a CEO and a founder should be focused on keeping the rest of the company on track and making sure that everybody is focused towards those growth metrics that you have. I'm going to end, I know we're running pretty short on time, by saying that growth is never something that just happens by mere chance. It really is a result of forces working together, and the companies that we see have gone through pretty significant exponential growth. It is a very intentional effort by the entire team and the partners and the investors to help them get there. With that, I am going to open up to questions and see what I can help answer for you.
Thank you so much, Rashmi. We just have time for a few questions, but to start it off, what are you most excited for in terms of new trends that you're looking at B Capital Group?
Yeah, I would say on the enterprise side, there's a few areas that we're keeping a close eye on. One, I'm quite excited about the emergence of AI and automation within the enterprise. We have a pretty robust portfolio within the enterprise space, but I think we're only scratching the surface in terms of how quickly digital transformation is driving a lot of enterprise success. And so we're constantly looking for companies that are leveraging AI and automation towards that. The second is on the adoption of developer productivity and open source technologies. Given again the time that I've spent at companies like MongoDB and Couchbase is one that I truly believe in. Armory was one of our investments at B Capital, and we're constantly looking for newer companies that are leveraging open source models to drive more developer productivity. And the third area is around cybersecurity, which, again, given all the number of hacks and breaches that we've seen recently, including the JBS one, I think more and more focus on cyber products that can help enterprises protect against these attacks is going to become even more important and relevant. And so looking for interesting approaches towards helping companies protect themselves.
So in terms of what you look for in evaluating growth stage founders, are you looking more closely at the team, or if they've established the right operational metrics? Like what is the main factors you're looking for when you're evaluating an investment?
Team has always continued to be quite important. So I would say regardless of the stage, team is I would say the number one factor that we definitely look for. The second is strong growth metrics. At the growth stage, I would say that it becomes less of an art and more of science, where, I mean, the numbers are quite evident in the growth story. And so we look for strong top line growth, but also looking for efficient growth. And so growth at all costs is not, I would say the pandemic taught us, is not the best way to build sustainable companies. And so that's where those operational metrics that we talked about today becomes quite important.
Definitely, I love your insights on sustainable growth. So it looks like we're at the top of the session, but thank you so much, Rashmi, for sharing your insights, for scaling to a growth stage. We have a lot of founders here that I think are navigating those waters. So really appreciate your time. And for our finalists, feel free to connect with Rashmi on LinkedIn or learn more about her in the Philo room as well. Thank you, Rashmi.
Thank you so much for the opportunity, and it was great to meet an amazing set of founders today. Good luck with the rest of the event.
Thank you, Rashmi. Appreciate it.
Thank you. Bye-bye.